Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we were asked to do a video called Why the Housing Market Will Not Crash. This is very controversial. Some of you who watch the channel know we talk about this for quite some time. We are not going to beat up on the people who say it's crashing. We tend to do that on our videos, okay? Instead, what we're going to do is we're going to go back and look from like 10,000 foot view.
Okay.
And we're going to look at the market, and we're going to go back historically. Now, all of this data comes from National Association of Realtors.
Right.
This is from the NAR report that just came out. This is just data. What we're going to do is look at the data and analyze it based on trends that we see, and then we're going to talk about some anecdotal stuff that is happening as well. Okay. So the first chart we're going to show here is median days on the market. Okay. Now, if you look at the bottom, I don't like the way they labeled this chart. But 2011-05 is May of 2011. So it was 11 years ago. And you can see that the median days on the market back then was 101. That was the bottom of the housing market. That was literally the bottom. It bottomed out in 2011. And then it started appreciating, okay? And what you see here is this trend of inventory, median days on market going up and down. Because days on market is lower in the spring and it's more in the fall. Now you see this normal trend go for about 7 years and then it just starts to taper off. Days on the market, it literally is the lowest it's ever been. For June, it set the record. Remember, we just did a video on this. Right. It set the record for the lowest ever, and interest rates have been rising for 6 months. So interest rates are going up, but we still have homes flying off the market.
Right.
Okay.
So if your home is on the market and you did not sell your home in 14 days or a month, please don't despair.
Yeah.
Okay. That's not selling your home that quickly is not normal. It doesn't mean that you should not revisit your list price with your agent, but it just means don't despair. Look at this chart and understand that it takes a while to find a match, right, between a buyer and the house. Not everybody loves your house as much as you do, and it just takes the right buyer to love your house and buy your house.
Okay. What this means is that if your house didn't sell and you're like, I've had the house on the market for 3 months or for 3 weeks and nobody's even come by or whatever, just remember that half of the houses in your market have sold in the first 14 days.
Right.
That's what this means. It means half of the houses are selling and half of the houses are overpriced, probably.
Right. So, to Todd's point, if you've had your house on the market for 3 weeks and no one's even visited your house, have a conversation with your agent, because that is usually an indication that the property is not priced correctly. You need to have people come through the house usually to sell your house. So if people are not coming to even visit your house, usually that's an indication that the house is not priced correctly.
Anecdotally, somebody that came to us to list the house decided to go with another agent. When we told him what the house was worth, he listed with the other agent for about 20,000, almost 20,000, 20%.
I was going to say it's 20%.
20% more than market value. Okay? We've been watching the house in the MLS and watching price reductions happen. So this anecdotally, I'm just saying, is you potentially are hearing about, I've had to do 3 price reductions. Well, when your house is worth this and you decide not to list it with this because the agent said that's what it's worth, and you went with another agent because they said, oh, well, let's list it for this really high amount, it's not selling, and you're having to go through price reductions, you may believe the market has crashed or bad things are happening. But that is not a market crash. That just means anecdotally your place is overpriced. This data is the actual. We were actually surprised when we did the market report monthly, because we do a monthly market report data, and saw that June was the lowest in recorded since the National Association of Realtors has been recording median days on the market. The median days on the market would have to climb substantially. It would literally have to 4x to go back to a normal market. 4x.
Right. So remember, homes usually sell in 4 to 6 months. So if your home hasn't sold in 3 weeks, you're probably okay, but you should definitely have a conversation with your agent to make sure that you're on the right track. Okay, next one. And if you guys like slides, please subscribe, hit the notification bell, and like the video so that we know that we're on the right track and that we're giving you the information that you're looking for.
Okay, the second reason why we believe the market is not going to just crash is number of homes selling in 1 month. Okay, 88% of all homes that were listed in the month of June sold within a month.
Wow.
If you look back at 2011, it was 24%, about a quarter, which is actually pretty normal. But about 30% of all homes sell in the first month for a lot of reasons. Sometimes they're just a great deal. They're just priced right. It's just luck. People just find them. This is the reason why we as agents don't like to overprice the house, because then it just ends up sitting on the market. And there's this misbelief that, if you price it high, maybe somebody will accidentally overpay by a ton of money. It doesn't really work. But when you look at this chart, you can see that there's been this is showing the froth of people buying homes. This number also, in order for a market to crash, would have to completely disappear. It would have to go down to, under 20% probably. Because 2011 was the bottom of the market. So it was literally the low point of the market for prices, and that's when people you could see that what this chart is showing is people are coming back into the market, recognizing there's value in U.S. real estate.
Right. And, look, we've talked about this before. For the U.S., our real estate values are still a great deal when you compare it to other countries and metropolitan areas across the globe. And foreign investors see that, and they are still in our market. And we are actually anticipating foreign investors probably making a bigger comeback as the travel restrictions go away, particularly for China, because remember, those people have had a hard time getting here. So if you can't get here, you're probably less likely to want to purchase a property that you can't even come visit.
The next chart we have here we thought was very interesting. The average number of offers received on most recent sale. You can see that at one point it was 5.5. That was the frothy time of 2021 when everyone was freaking out.
And if you're a buyer and there were like 35 offers or 85 offers on the properties,
there were some where there were a lot
that you wanted, they all kind of got calculated in here, but I feel for you.
What this chart shows is it's going back to a normal market. A normal market's a couple. You get two offers, and
usually not at the same time. Usually, what happens is you get what happens most of the time is you get an offer in the first 30 days, and that actually usually is the best offer. And a lot of sellers say, "Well, I'm going to wait and I'm going to hold out for a better offer," and then, come month 3 or 4, now they're getting another offer, and it's usually not as good as that first offer in the first 30 days, but now they're in this situation where their house has been on the shelf, so to speak, for a while, and they end up taking a lower offer.
We actually do expect this to go back to a more normal level. The percent change we're seeing comes from such a high that it's a drastic change to get back to normal. And mostly this is probably just because of interest rates.
Right.
Because if you've noticed, the latest jobs report were outstanding. We have the lowest unemployment in ever recorded. Matter of fact, it's so much so that the White House came in and said, yes, we just had 2 quarters of negative growth, but we're not in a recession because there's the largest spread ever of jobs to people looking for jobs. There's more than 2 times the number of jobs open as people looking, and the lowest unemployment we ever had. They're saying you don't see that and even the Fed chairman, Jerome Powell, came out and said that. So there's definitely weird stuff going on, and it is, obviously the problem with the stock market was price earnings ratios out of line with earnings. But here we basically have, we're heading back to normal here.
Right.
So it'll be interesting to see what happens. We just did a video about our expectation 2022, 2023 price appreciation for the U.S. And if you want to see that video, I'm just going to drop it up here. You click on it, it stays off to the right-hand side, and then later after this video, you can watch that video. Okay. This was a fun one because we've done a couple of videos about cash buyers. This number is very interesting. It's 25%. It was 25% at the bottom of the market in 2011. As you see here, this chart goes all the way back to 2008, where it was bouncing around. The reason it bounced around so much is because some markets were really getting hammered with REO and the home prices were so low, all those purchases were cash. And then other markets were more normal and people were still buying with loans.
Right. And remember, cash buyers are kind of a funny combination. So you've got investors, you've got owner-occupants, and then you have foreign buyers who would have a difficult time getting a loan. So it's a combination of buyers in there.
Okay. The next thing that greatly affects the housing market, whether it will crash or not, are first-time home buyers. They're a key part of the market. Usually investors are a net even because you have investors who have decided at some point in their life to exit being a real estate investor, and then new investors come in the market, and that's pretty much a zero-sum game. Okay, rental properties tend to stay rental properties and such, but first-time buyers can be a huge thing. What was interesting was, according to this chart, 2008 was the highest number, but remember this was really when the market had come off highs of previous years. Okay, and the market was still kind of declining. But because the prices were going down, first-time home buyers were now, remember there was a period where they couldn't buy because the home prices were too much, it was pent-up demand and they all rushed in. What this really shows, and you can see there's even a little uptick here, the first-time home buyer's not gone away.
Right.
And this is the thing that people said would cause the housing market to crash. The first-time home buyers, people couldn't afford loans. But remember this data, the last 6 months, home prices or home mortgage rates have been going up.
Right. So what I like about this chart is the stability. I mean, if you look at all the way across, first-time buyers have been really consistent. So no matter what the market has been doing, for the most part, first-time buyers have been right in there. And first-time buyers kind of got hurt over the last couple of years because there were so many buyers with higher down payments or cash and that sort of thing. So their loans, which are predominantly FHA and VA, were not attractive to home sellers, so they really couldn't participate in the market as much as they would have liked. But this time around, now that some of that has kind of gotten cleared out, first-time home buyers who are using FHA and VA now have a fair chance at purchasing a property because there's more inventory. There are less multiple offers, so sellers are much more willing to entertain those FHA and VA offers.
So we have one more slide. I believe this slide is the most telling slide of why the housing market's not going to crash. We're going to spend some time talking about it. Specifically, we have expertise in this field. And this is about foreclosures because we've sold over 3,000 foreclosures in Las Vegas, representing the banks as the listing agent. We're going to go back over the data. Median days on the market's the lowest it's ever been. Even if it goes up, it's still going back to a normal market. The share of homes selling in under a month, the highest it's ever been. Even if it declines, going back to a normal market. So when you see changes, don't freak out. We can't stay at no homes on the market and everything selling in, with multiple offers, right? That can't last. So just because that trajectory change doesn't mean, and that's why we have these charts that go 10 plus years to see that. The number of their homes are still getting a lot of offers, but less than 2021. We still have a lot of cash buyers. That has not changed, and we still have a lot of first-time buyers. It's suppressed, but we still have quite a bit. Basically what we've had for the last 9 years. Okay, here's the last slide. This, to me, is the number one reason why the housing market is not going to crash. What caused the housing market to crash, Juana, 2006, 7, 8?
Well, borrowing money that people couldn't pay back because they were borrowing 100% or 125% of what the property was worth. They couldn't make the payments because what they were looking to do was flip those properties. So there was a lot of speculation. They weren't great loans. The borrowers weren't particularly capable of meeting those repayments because the lending practices at the time were such. And that's not happening this time around. This time around, we have had good lending practices, meaning people have good credit, they have good job history, people are putting money down. So the buyers are much more qualified borrowers, which helps to have them continue to make payments. Plus, we've had people having to put down a lot of money when they go to purchase a property, which builds equity instantly, right? So we've got those, and then we've had price appreciation. So all of these things put together make for properties that we've shown before in a previous video where we've got the value of the home up here and the value of the debt down here, so there's a big spread. So because of that, properties are not upside down, meaning that the people don't owe more than what the property's worth. And when there's equity in the property, then properties can sell naturally on the open market, and everybody's good and happy.
And anyone who bought a house before the last 6 months, your interest rate is so crazy low, you'd be stupid to ever sell the house. Like even if it becomes worth less money, who cares? There's no triggering in a loan that says you must sell now, right? You have to sell. Why would you sell your house for $1,400 and then go rent for $2,000? Doesn't make sense. 1%.
Right.
The share of distressed sales, foreclosures and short sales, is 1 of every 100 homes, which means 99% of all sellers are equity sellers.
Right.
Like there's not going to be a rush of people that have to sell. And even if you go back to, probably 2/3 of the way back across this chart, which is 2014, back then it was still over 10% were short sales and REOs. It would have to 10x the number, and that was a normal market.
Right. And I want to point out something. As far as these distressed sales, what these charts don't show is the nature of the distress. And what I mean by that is, at least in our market, the nature of the distress a lot of times is a life event such as a death. And that causes distress, because when somebody dies, if there's no one around willing to step up and deal with the property, then the property goes into foreclosure. Now, I'm really familiar with this because I do sell properties that belong to people who have passed away, whether they're in probate or it's part of a trust or whatever. And I see that all the time, where the heirs didn't know what to do and they did nothing and didn't make the payments, and then the property ends up in foreclosure, and then we're panicking, how do we get this thing sold in time so that the heirs do end up with money and the property doesn't go back to the bank. And so this happens very frequently when somebody passes away. And I think that 1% number, I think those cases are an outsized portion of that 1%. And that's just my personal experience with that. It's not necessarily something that I can prove to you with a chart.
We have gone and done the data. We've pulled it and done videos on it, foreclosure data for Clark County. We've actually gone in and looked at some of the houses that are in the report, and by far most of them have equity. They're not foreclosing because the people couldn't make the loan payments, or they're upside down, or they walked away. They have a ton of equity. And you get 2 cases. One is someone died, they don't have close family, and the family, it goes into probate, and people are trying to figure out what to do, and no one's making the mortgage payment. And then the bank starts foreclosure. And it's like they only owe $150, the house worth $350. Shouldn't get foreclosed. They need to make the current payment current and then sell the house the normal way and take the money. But a lot of people get wiped out. This is a sad thing, that heirs get wiped out because people weren't paying attention to the finances of a parent or whoever. And then the other thing is divorce, where people just get sick of each other and they both leave the house. Or one leaves the house and the other one who's in the house stops making the payment. It's a punishment. They say, I'll let the house be foreclosed. I don't care. And there's equity in the house. Okay? So we don't see foreclosures. We literally, what we do for a living is most of our sales, and just so you guys all know, watching this, if this is the first time you watch our channel, we've sold over 3,000 houses, okay? We sell them as the listing agent, meaning we list the property in the MLS, and then some other agent who gets buyers. They get the buyer and take them around and show them to a bunch of houses, okay? And we have done that for friends and family. But of the 3,000 plus homes we sold, 3,000 of them have been listings, okay? Most of those were foreclosures.
Right.
We know the market. We know we're experts in that field. Almost nobody in this country knows as much about foreclosure, unless you're in Arizona, Vegas, maybe Orlando, or in a couple other markets, Riverside potentially. Nobody has sold as many homes as we have listed. There are our old clients, Fannie Mae, Freddie Mac, Bank of America, Chase, Wells Fargo, asset management companies you've never heard of, banks you've never heard of. We work with all of them. We have worked with all of them. None of them have business for us. They all tell us, sorry, we don't have it, we're not seeing it. All the people we know that worked in asset management, they're all doing other jobs now. They became real estate agents, they do other jobs,
right.
Okay? Because there's very little business. That business literally doesn't exist in the way it did. If we thought it would, we would tell you, because we could see that up front. We start to see the broker price opinions and this pre-foreclosure activity. We're not seeing it. So we don't have a foreclosure boom. And you can see from this chart, this isn't an artificial thing where COVID and the banks are sitting on all these houses waiting to happen. They haven't been happening. And this chart goes way before COVID. You can see they weren't a thing. So there are no foreclosures. We don't see anything that would indicate that there potentially is a market crash. We don't believe it. Are prices going to keep going up at 15%? No, we already said that they wouldn't. Could they go down in some markets? Yeah. In some markets, they certainly could go down. If I had to guess, if I took the top 100 markets, the largest 100 markets in the U.S., and had to guess, I would say in the next year, 60% would be more and 40% would be less. I don't know which ones would be more and less. But if I had to guess a 10-year, I would guess over 90% of them would be up in 10 years. And I would guess Vegas is for sure one of them.
Yeah. So if you are a family member who has lost a loved one and don't know what to do, particularly if they've got a reverse mortgage and you don't know how to deal with it, please reach out to us, because this is what we do and we're good at it, and we'd love to help you sell that property and make everything good, have the heirs get their inheritance, pay off the creditors and the banks and whatnot. So it doesn't have to be an awful experience. We're here to make it good. So please give us an opportunity to make it good. If you like the video, please subscribe, hit the notification bell, share the video, leave us comments, and we will see you on the next video. Bye.
Bye.